I want to bring in Scott Bauer, CEO of Prosper Trading Academy, to help set up the action today. Scott, I appreciate you joining us to kick off a new week here with markets. We had that holiday shortened week last week. We ended at all-time highs for the S&P 500 on Friday. What do you make of that? Do you think it's sustainable?
Boy, it's quite a run here, especially going into this week's deadline. And is it sustainable? Yes, but I think you have to be very cautiously optimistic, just because anything can change with the tariff situation here. I know that, yesterday there was an announcement that these tariffs are now going to go into effect at the beginning of August here. But Diane, there sure seems to be a big sense of complacency to me in the marketplace right now. And, one little deviation from, let's call it the calm that we've had over the last several weeks here. And I think we could have a pretty decent sell-off. I'm not talking about 5-10% or anything like that, but I think the market is prime for a little bit of a shock.
Prime for a little bit of shock. And I'm glad you mentioned the deadlines, because it feels like we've got a little bit of a couple of moving targets, right? You had the July 9th, that was the self-imposed, if you will, deadline by the Trump administration. So that's this week, right? But then you hear from the administration with President Trump alongside Commerce Secretary Howard Lutnick saying August 1st. So it sounds like maybe the 9th is the deadline, but then the 1st is when they are executed. When you think of the 9th, are investors properly positioned for any potential shock, as you mentioned?
I don't know. It seems to me that the VIX is way too low in volatility across the board, and the S&P, the Qs, seems to be a bit low. And that's where that complacency kind of bothers me a little bit here. I would personally, if you want to be in this market, you want to stay in this market, we're at all-time highs, maybe it's moving higher, fine. That's okay, but buy some of that cheap protection that the market is offering right now. So overall, are investors, positioned the right way? I'm not so sure, but to me, volatility is just way too low.
When you think about beyond, say, the tariff issue, what do you see as a potential catalyst this week and beyond, especially when you think about now we're at the beginning of the second half of the year?
Sure, there's a couple things. Obviously, we have the beginning of earnings season, really kicks in next week, pretty big with the banks, but it does start this week. But something I'm focusing on this week, there's some bond auctions this week, the 10-year. And how is the market going to respond to that? How is, that going to be graded out, perhaps? Because we know how sensitive the markets have been to a change in rates, and the 10-year is what everybody is watching. So is that going to be something that investors want? Are we going to get a really good A or a B grade, as they say, for that? Or is it something that, there's still a lot of concern, there's not going to be a good auction, and maybe we see rates start ticking up again? So I think that's really underestimated, and that's the key, what I'm looking at for this week.
So you mentioned underestimated, yes, because a lot of times we get those signals from the bond market, and I remember, that 20-year auction that ruffled some feathers. Is it about what demand looks like?
Absolutely. I mean, if there's decent demand, or if there's overwhelming demand, that's a good thing. That's a really good thing, I think, for the economy, for the equity markets, and obviously if there's big demand, that'll push rates lower a bit.
And then you mentioned that earnings, obviously, are a key focus next. They mostly held up from our last earnings season. What factors do you think are going to matter the most, especially our most recent earnings season? It was all about, what companies said about tariffs and how they were adjusting for that. Now that we've got a quarter where we can see how companies executed around tariffs, what do you think matters in the conversation, and what do you expect to be a theme this earnings season?
I don't think there's been a lot of clarity since the last earnings, reports where companies have talked about tariffs. So I think we're going to hear still a lot of uncertainty as to how that's going to affect future earnings and guidance. I would just like to see a little bit more talk about, okay, this is how we have positioned ourselves for the upcoming, tariff event, tariff storm, if you will. This is kind of the range that we see affecting our when I say our, I'm talking about individual companies, earnings, revenue, guidance. But I have a feeling it's going to be more of the same, where there's still so much uncertainty, right? There's not a lot that has really changed from a quarter ago in terms of the unexpected consequences of what may happen with tariffs. So I think we're still going to hear a lot of, well, we don't really know, we're not really sure how to put out that guidance. And if we get that, that could be a negative to the market.
And Scott, I'm curious to know your thoughts on the Fed, especially in the context of that jobs report that we got on, I was going to say Friday, on Thursday. There's been obviously calls from the president and other voices for the Fed to cut rates essentially now. So, but the expectation seems to be largely we won't see one this month. What's your thought on that?
Yeah, exactly. The July expectation I think is under 5% now for a potential cut. When we saw a big shift after that, as you said, after that jobs report, both for July and September. More importantly, the September, which had been pricing in nearly like 85% probability of a cut, and that's down to about 60% right now. So Powell, the Fed, they don't really care what the president says or what the pressure is.
Right.
They're going to continue with following the data here. But again, maybe that bond auction that we see, maybe that plays into what the Fed decision might be here. But I think that the September number probably is a lot higher than the market is giving it right now at that 60%, and that's for a cut. And that's really what the market and investors, I believe, are really kind of banking on, is we're going to get a September cut and probably another one later in the year.
All right, September, possibly another one, probably another one later in the year. That's the word from Scott Bauer. Thank you, Scott.